Hello everyone, welcome to my YouTube channel. My name is Penny and I'm here to make you smarter with your money. Today, we're diving into the world of investing, specifically focusing on a strategy called dollar cost averaging, or DCA for short. If you're a new investor feeling overwhelmed by market fluctuations, DCA could be your best friend. Why dollar cost averaging is right for a new investor. This approach involves investing a fixed amount of money at regular intervals, regardless of market conditions. It helps reduce the impact of volatility and lowers the average cost of your investments over time. In this video, you'll learn how DCA can simplify your investment journey, minimize risks, and build wealth steadily. So, stick around as we explore this powerful strategy and how it can benefit you. Understanding dollar cost averaging. Dollar cost averaging, or DCA, is an investment strategy where you invest a fixed amount of money at regular intervals, regardless of the asset's price. This method allows you to buy more shares when prices are low and fewer shares when prices are high, effectively averaging your purchase cost over time. Historically, DCA has gained traction during volatile market periods, as it helps investors avoid the pitfalls of trying to time the market. For example, if you invest $100 monthly in a stock, you'll buy more shares when the price dips and fewer when it rises. This approach not only reduces the emotional stress of investing, but also promotes disciplined saving and investing habits. Benefits for new investors. Dollar cost averaging offers several key advantages for beginners entering the investment world. First and foremost, it significantly reduces emotional stress associated with market fluctuations. By committing to a consistent investment schedule, you can avoid the anxiety of trying to time the market. Additionally, DCA encourages disciplined investing habits, making it easier to stick to your financial goals without getting sidetracked by short-term market movements. Over time, this strategy can lead to substantial long-term wealth accumulation. By consistently investing, even during downturns, you take advantage of compounding returns, allowing your investments to grow steadily. Overall, DCA empowers new investors to build confidence and achieve financial success. Mitigating market volatility. Dollar cost averaging is a powerful tool for managing market fluctuations. By investing a fixed amount regularly, you automatically buy more shares when prices are low and fewer shares when prices are high. This strategy helps smooth out the effects of volatility, reducing the risk of making poor investment decisions based on market timing. Studies have shown that attempting to time the market can lead to missed opportunities and lower returns. For instance, research indicates that investors who consistently use DCA can achieve better long-term results compared to those who try to buy at the perfect moment. Ultimately, DCA provides a disciplined approach that can enhance your investment success over time. Practical implementation. Implementing dollar cost averaging in your investment strategy is easier than you might think. Start by choosing a reliable investment platform or brokerage that offers automatic investment options, such as robo-advisors or traditional brokerage accounts. These tools can help you set up regular contributions without the hassle of manual transactions. When selecting the right investment vehicles, consider low-cost index funds or exchange-traded funds that align with your financial goals. It's also wise to begin with small, manageable amounts that fit your budget, allowing you to build confidence as you invest. Remember, the key is consistency. So make it a habit to invest regularly and watch your wealth grow over time. Common misconceptions. There are several myths surrounding dollar cost averaging that can mislead new investors. One common misunderstanding is that DCA eliminates the need for market timing. While it reduces the impact of volatility, it doesn't completely eliminate risk. Some believe that DCA guarantees profits, but it's essential to understand that it simply averages your purchase price over time, and losses can still occur. Additionally, many investors mistakenly think that DCA alone is sufficient for a successful investment strategy. In reality, maintaining a diversified portfolio is crucial for managing risk and enhancing potential returns. By addressing these misconceptions, you can approach dollar cost averaging with a clearer perspective and a more informed strategy. In summary, dollar cost averaging is a valuable investment strategy that helps new investors manage market volatility while promoting disciplined investing habits. By consistently investing a fixed amount, you can reduce emotional stress and potentially accumulate wealth over the long term. Remember, starting early is crucial. The sooner you begin, the more time your investments have to grow. If you found this information helpful, please subscribe to our channel, like this video, and share it with others who might benefit from these insights. Stay tuned for more tips and strategies to enhance your investment journey.